if this rebounds extend, we're going to get some bullish signals later on.
So last week ended in a bit of controversy with the Brexit vote going in favour of the Leave campaign. How is the technical picture looking after the UK referendum?
Well, let's look at a measure of volatility, and we see last week, which is the big rise in volatility above the Bollinger Bands, all the way to 25%, and 3 days later we're already, even though the week is not ended, have a big move down. So the event is already over. Also, this big move up has brought the momentum to an overbought situation, and it's most likely that the VIX will remain around 20%, between 20 and 18%. Also, if we look on the longer term VIX and related to the 1 month VIX, we see here on the top part the ratio, and we see that the short-term VIX has risen quite a lot more than the 3 month VIX, to a point which correspond in the past to spikes, high for VIX and the 3 month VIX. So now we made a spike quickly and it reversed back down. So clearly now the bearish people have a problem and have taken some profit on their shorts.
So across the pond in the US, how are the equity markets looking?
Well, just the opposite of VIX, basically. While the VIX was moving up to 25%, we had this big move down. And now, after 3 days, what we see that we had a small spike below 2,000, so 1990 about, and now already moved back up to 40 levels. The thing is that the oscillators on a weekly basis were relatively overbought, and now they are oversold. So if this rebounds extend, we're going to get some bullish signals later on.
Is the S&P rebound going to last?
Well, look at the daily charts. Here we see really the dramatic move on the Brexit, knowing the result on Friday, then the Monday and Tuesday. And we see already it's moving back up to the levels which were former support in the past. So we have also these clouds here in green, and that gives us an idea that the rebound would probably extend at least to 2070 levels, but it might be capped for a little while during early July by this cloud. Now we also know, as this cloud is relatively thin, that if we are above 2080, then the picture is going to look much more bullish, and that's not too far from where we are now.
So is Europe due a rebound as well?
Well, Europe it was a little bit in a different situation, but it's going to follow the rebound. First of all, we noticed that we went all the way down to the February low, what we did not do in the US market. And there we left a spike, and we are also at a very oversold situation. And the reason why we went to retest the February low is that, of course, the relative strength of Europe versus the S&P is still in the downtrend. So the correction was much more important.
So how's Japan looking?
And if we look at Japan, what we see is that a similar situation. We also retested the February low, and it's started to rebound. What is interesting to notice on the short term is that even though on Monday, while the European market was still going down, the Japanese market had started to react positively, and it's continuing to do so. And now, most probably, it's going to get the help of the momentum, which was oversold, for a further rebound direction 16,000. Above 16,000, probably things will look much better.
Well, Japan is far from Europe. How are the emerging markets looking over there?
Well, the amazing thing is usually when we have a correction, emerging markets tend to overreact and tend to underperform the S&P 500. That's not the case this time, probably because it's fundamentally not concerning the emerging market as much as Europe and the US with the Brexit story. And what we see here is really a rebound on the former support, and now it's going to look like relatively nice and bullish, especially as the oscillator is not overbought anymore. If we look at, beside India, even a market like Brazil, which was much more behaving on a worse note, it's also looking relatively nice, and we noticed that the relative strength versus the S&P is rising, as well as relative strength of Brazil versus the emerging markets. So there is some catch-up there as well.
So is the worst over, and what should investors do in regarding holding of gold?
If the worst is over, certainly it's about time to realize that on the Brexit news, the gold rose to 1360 and made a big spike and pulled back quite a lot to 1323. So most probably, if things cool down, we're going to have a 1360, 1250 range, and it could be a good idea to take some profit given the rise from 1050 so far. So it's good time to take profit above 1300 and probably look for buying back around 1250. And also what we have, if it's the worst is over, is that investor will have new questions, especially on the side of the bonds. The whole Brexit story has brought the interest rate on the US from 175 to 145, making a new low, a series of new lows. Now, what we have right now with the rebound is possibly a kind of island reversal. We could open up above 155 today, and that would imply that, like the previous island reversal we had in February, that we had a relatively strong move all the way to 175. So that means if the yields are rising, that the bonds could take some profits. And so investor will have to decide whether they move money out of bonds into equity.
Well, thank you, Bruno. It's always a pleasure having you in our studios.
You're welcome.
That's all for today's broadcast, but don't forget to click back on Dukascopy TV for the latest business news. Goodbye for now.